Subscribing to this channel provides you regular access to professional advice on independent operators. If you want to support us, like, share, and turn on that notification. Welcome to Making Your Miles Count. This week we're going to be having an interview with John Cerniglia, who is a professor at Indiana University, talking about philanthropy. One might wonder what building wealth has to do with giving money away. But it's actually quite interesting if you really do a deep dive into wealthy people. Charity is a huge part of their life, and you have to get to understand a little bit how money works around the world. I hope you enjoy it.
Welcome to Making Your Miles Count production, an educational program to all Canadian lease owner-operators with your host, Robert Scaper.
So how you doing?
I'm good. How are you?
Oh, pretty good.
Good to see you again.
Yeah. It's been a while. A lot has happened, but not on the philanthropy stage, but podcasts and the like. We've been doing a lot of podcasts, and something very close to my heart is philanthropy, charity. I don't know how you would define it one way or the other. As an accountant who prepares taxes, I come from philanthropy as from this perspective. And that is, if you're not an anti-tax, but a minimalizing tax perspective, you must increase your philanthropy. You can't have both. You either pay your taxes, or you to give to philanthropy, one of the two. From a societal perspective, that's how I would view it anyway. And I believe that there's definitely a place for taxes in a free country, of course, but of all of the excess, basically, in my opinion, it should and would go to philanthropy. Now, I had no idea that universities actually teach philanthropy. So it was, well, actually, shouldn't say that. I have my MBA in financial management. We did take, I guess, a section of a syllabus was on philanthropy. But I can't remember. That's 20 plus years ago, almost 30 years ago. But considerable things have changed in the last 30 years in philanthropy. It is a humongous industry, just ginormous. I had no remote understanding of how big the industry actually is. Okay, so my first question is, are there other universities that teach this in a scale that you do?
Yeah, that's a good question. I need to be careful with regard to how I represent Indiana University or the Lilly School of Philanthropy, of course. What you should know, Robert, is that I serve as adjunct faculty, which, of course, I know you know this, but maybe for others you might share with. That means I have a very part-time role at the university. I am first a practitioner in philanthropy, in generosity. That's how I spend my days. And then I teach. In fact, I had a class this week that I taught for 2 days on annual sustainability. And it is true, the Lilly School of Philanthropy at Indiana University was the first college fully dedicated to the advancement of ethical fundraising and philanthropy. And it's housed at Indiana University, of course. It dates back to Hank Rosso, who founded the fundraising school over 40 years ago at Indiana University. And I certainly believe personally, it is the premier education and professional development experience that philanthropy professionals all over the world enjoy. I'm actually teaching a class right now that's asynchronous, so it's an online class, and we have people from a half a dozen countries who are participating in the class and who are learning about philanthropy, even in some fascinating places, Robert, where you might not expect that there's much philanthropy at all. Even war-torn nations have people like me who spend their days inviting Philanthropy. So yes, there are other universities, nationally recognized universities, that have programs and centers for study of philanthropy. Very few have a school, a college fully dedicated.
Sure. For the little bit that I do know, I remember hearing a phrase in some sort of documentary or something where, for instance, Bill and Gloria Gates have their foundation, but they also have a school for philanthropy that's associated somewhat with their own organization. How does that would that be considered more of a private college, or is it or do
Yeah,
they generally just do that to raise money for their own foundation?
yeah, that could be. I mean, there are thousands, maybe tens of thousands of organizations and groups and consulting firms who offer education or professional development for people interested to learn more about philanthropy or generosity or fundraising. In fact, there are philanthropists. David Green comes to mind, the founder of Hobby Lobby. Uh, and some of them, like David and others, convene other people like them, other philanthropists like them, for a day or two experience to learn how David and Barbara Green do philanthropy. And he does that completely for altruistic reasons. He does it because he recognizes that part of maintaining a civil society is to stimulate philanthropy among the people, among the population.
In definition, is there a difference between philanthropy and charity, or?
Great question. Yeah, great question. Yeah, we choose our words very carefully in this profession. So in philanthropy, we speak about a mutual exchange. So there needs to be value exchanged between the two parties. Charity implies I come with my hands out, I'm starving, and you give out of generosity, and I receive, and you help me feed myself and my family. Charity is a good thing. It's a biblical thing. It's a good thing. Philanthropy is sort of the next order of things, the next order of charity. Philanthropy is where there's an exchange. Let me explain this a little bit. Um, uh, where I work in my day job at Operational Mobilization, we have work going on, Robert. We have 500 initiatives happening in about 140 countries right now as I sit here with you. One of them is a place in the world where you literally cannot go, Afghanistan, but where you might have a deep heart, a broken heart for what's happened in Afghanistan the last 20, 30 years. We have people on the ground feeding malnourished children in Afghanistan right now. The exchange I can provide to you if you give is what's called agency. You literally, I mean, you could fly to Guatemala and feed a hungry family if you want. You could fly to Guatemala City today and be there tomorrow. You could feed a family. You cannot fly to Kabul and feed a starving child. But I offer you agency. If you give to my cause, I offer you the ability to do something. And if you have a heart for that, then this exchange happens, right? That's one example of agency. That's what philanthropy is. You're looking to accomplish something. You can't without a partner. I provide you as a means to accomplish that. That's philanthropy.
There's actually like a business type of a transaction in there.
Yeah, we don't like the word transaction. We like relationship. We like a mutually beneficial relationship. I'm married to the same woman for 31 years. Her name is Cassandra. I don't think in terms of transactions, of course. I think in terms of a relationship. And let's face it, you know this, in all relationships, if the relationship is always one-sided, if I'm only ever taking from Cassandra, then that relationship withers over time, right? I have to be attentive to her needs and her desires if I seek to cultivate and sustain and grow that relationship. The same thing is true in philanthropy, right? I can't just keep coming to you, Robert, and asking you for money year after year after year, which, by the way, is what most charities do.
Yeah.
We know that. Good philanthropy, and as a practitioner, good philanthropy means I ask you questions. Robert, what are you seeking to accomplish in your philanthropy? Like what burdens do you carry on your heart for people you care about in this world? And let me explore how maybe together we can address some of those. That's good philanthropy.
Yeah.
Not transactional, relational, and mutually beneficial.
Sure. I'm not sure how much difference there is philanthropically between Canada and the United States. But I've been the president of a foundation here in Canada for over 2 decades, and I remember in the original setting up of the foundation, it was very clear. First of all, it's basically the simplest form of foundation in Canada. Basically, I can give a charitable organizational receipt, but I can only the foundation only can give to other registered Canadian charities in there. So and you can do things outside of Canada, but only through, as you were saying, agency, and then it flows through there. And so I can't give from the foundation. I can't give to somebody in Guatemala at all unless there is an agency. Legally, I can't. When it can do. And so I know from a legal perspective there are barriers for sure between countries, but unless you have agency available through you, and that's very interesting. I went through an extremely unique situation a number of months ago, where I was doing a project in association with a very large organization, charity, and they, of course, were the agent. Actually, I was expecting them to be the agent. They were based out of the United States. The only thing is my foundation could only give to another registered Canadian organization. They were associated with another registered Canadian organization. So let's just say, as an example, I was giving $10,000. I wanted $10,000 to go to the United States organization. It had to be funneled through the Canadian registered charity. And the difficulty I found there was, as it goes through an agency, there is commissions that is taken. And I understand the commissions. It was the standard, as I've done a little research on, the standard was actually 10%. And from an administrative perspective, I'm an accountant. I know 10% is actually very reasonable. I don't suffer that. But all it did was just go into one bank account and out into the other bank account, and that's it. And that's how I learned how organizations moved, had these agreements with each other, and how they processed funds out of the country and stuff like this, because they all have to have these, I guess, agency agreements and relationships.
Sure.
And it was fascinating. It was a little shocking at first, but it was quite, how do I say, much more administratively focused than what I was historically used to.
Yeah, you and I are using agency in similar and different ways. And so, yes, you're talking about the regulatory environment, you're talking about structures and administrative process, all of which are really, really important, particularly when we're talking about having impact on a global scale, right? And that's all good. And in my day-to-day job and the job of my team, I have a nationally deployed team, we work in those structures and those realities every day. When I use the word agency as a philanthropy professional, I'm talking about I'm offering you impact agency, like human impact agency. You desire as a philanthropist to save and change lives, in my example, like Afghanistan or Pakistan. We're doing flood relief work in Pakistan for people devastated by the floods there earlier this year. We're building homes. You probably can't get on a plane. I mean, you literally, legally, you could get to Pakistan and go build houses, but I'm guessing you have work to do and clients to serve, but you might be moved by that, right? And so you desire to have impact. Our organization offers you agency to do that.
Absolutely, and agency I see as a phenomenal benefit. What, for instance, there is a are you familiar? You're familiar with the Ford Family Foundation?
Of course.
Yeah. In Canada, we have many family foundations, Richardson, Bronfman's, various ones that
Yes.
own different organizations. And they keep the, I guess you would call it the shares of their very lucrative businesses in a foundation. And that way it basically succeeds I guess the lifespan of individuals and long-term taxation and the like.
Yes.
That's my understanding.
And the funny business of family members.
Yeah, and
it shelters the company, it protects the company from the funny business of some family members. Yes.
Exactly. Yeah, and it keeps it quite stable. I'm actually a little bit of a fan of the Ford Family Foundation for the simple reason that even though they're a publicly traded company like the Ford Motor Company, it's mostly controlled by the family itself, and they are much more longevity minded in the management of the company because they don't care about quarterly returns nearly as much as where are we going to be in 5 years. Stock market can be very short-sighted sometimes, and foundations very much smooth out that thing. It's an exceptional.
They care about perpetuity. Most of them care about perpetuity.
Exactly. So I'm a big fan of that. In some of the research that I did in philanthropy, I sort of stumbled across two major books. One is the book Titan, from the biography of John D. Rockefeller. And the other one is the biography of Andrew Carnegie.
Okay.
Andrew Carnegie, U.S. Steel. Okay.
Yes.
They basically, and at least in my opinion, they brought into the United States in particular the whole concept of philanthropy. Both of them gave all their money away before they died. And when the Rockefeller Foundation, the other is Carnegie. Now Carnegie went and gave it all out to libraries and music halls and basically libraries all across the United States. Rockefeller went several different ways. He went medical assistance, like he eradicated river blindness and a bunch of other things, and helping pharmaceutical companies, that kind of thing, and the like. But they did that, at least from what I understood in reading that, they did it primarily because they would have lost a huge amount. They did this all before taxation, before World War I and II came along or whatever, and the taxes they could see that they were going to be wiped out, or the huge amount would just go to the government. So they did this. At least maybe a little bit of speculation in there, but I think John D. Rockefeller was pretty close to that. He knew he wasn't, he didn't want to throw anything or too much to the government or so. And it spawned on what I've called the mega philanthropists.
Sure.
And it sort of birthed that. What percentage of, I guess you would call it charity or philanthropy, how has philanthropy grown in the last 100 years?
Yeah, well, it's growing. It's a great question. In the US, there's a great comprehensive report called Giving USA, which is published every year. The Lilly School of Philanthropy are the chief researchers and compilers and editors of that report. We've been publishing it for over 40 years. So it's growing every year, even during times of recession. As an accountant, you'd be perhaps interested and maybe even a little surprised by that. So it's growing every year. It'll grow in a typical year, 4%, 5%, 6%. So we're encouraged by that. Of course, this is about a $450 billion sector that we're talking about. If you look at sectors, the philanthropic sector in the U.S. is comparable to healthcare and several other industries, which is really stunning. It grows even during times of recession. The one exception was 2008, 2009, where giving actually went down. Giving increased in the year 2020. You might remember what happened in March of 2020. Everybody thought the world was going to end in 2020, and everybody was sure to believe that giving would decline. It actually increased because human beings respond to need, the visibility of the need, how adjacent they are to the need, and of course COVID. We were all just critically aware of the need. So it grows annually. About 65 to 70% of all giving in the U.S. comes from individuals. In fact, the big shocker to most people is that only 5% of giving in the U.S. comes from corporations. And this is pretty interesting because, as you talk to people, you try to raise money for a cause that you care about, pretty quickly somebody's going to say, well, let's go to a local business. They have good reason to give. But to be blunt about it, that's not where the money is. The money is with families, with individuals and families. Now, we have a couple of things that we're concerned about, trends that we're concerned about. One is that a smaller and smaller percentage of households are giving annually. It's in the mid 60s, 68, 65% of families give each year, which is remarkable, but it's in a slow decline. And we're trying to understand why that is. The other thing that's happening, which we're concerned about, is we're seeing a separation of wealth. This is a bit of a controversial thing by some perspectives, I know that. And so as wealthy people are controlling more and more of wealth in the US, and that's a statement of fact, they are giving more and more, which is great. So giving is going up, but not because more people are giving. In fact, fewer people are giving.
I see.
But giving is going up because wealthy people are accumulating wealth at a very rapid rate, and they're giving. Thankfully, they're giving more and more. So major giving and mega donor giving is where the growth is, the philanthropic growth is. And actually, so that means a lot of institutions are focusing more and more of their time on major gifts and less of their time on mass market fundraising.
Very, very, very interesting. As I was doing a little bit of research, I stumbled, like I said, a few months ago, in the situation that I was in, and I found that some very large charities, I would call them charities, I guess, they have, I can't think of the name, but they have money that is set. Is it like a bursary or something set aside that they only take out 5 or 6%?
Yeah, it's called an endowment.
Endowment, that was the word.
That's right. It's called an endowment.
An endowment, and some of these organizations have hundreds of millions, billions of dollars in these endowments, and the thought, I guess, would be that when you get a huge donation, somebody who gives multi millions of dollars,
right,
that they have concern that big giving is going to affect the organization too much. and actually, this was a struggle that John D. Rockefeller went through. He never, for instance, he never paid out the mortgage of the church that he attended for whatever 60 years or whatever it was until the day before he passed away. He passed just the day before. He said, "No, I want to get rid of the mortgage." He paid it, and he died the next day. Which you could use an analogy: just don't ever pay out your church's mortgage, right? No, but it was something that he really struggled with.
Yes.
He started out, what is it, Chicago University, right? He was basically founded Chicago University, and he didn't want to set up an organization that would continuously, because they knew he had hundreds of millions of dollars, and they just keep coming and coming and coming, and he didn't like that,
Right.
and fought against that. But in the end, I think he lost that battle. They just kept on draining him to like 10, $15 million at a time, and that.
Yeah, so there's a couple principles at work here that you're tackling and covering, which is wonderful. So philanthropists like Rockefeller or Gates or many, many others, they need to be sure they don't destroy an organization in an effort to help it, right?
Exactly.
So that's one reason why endowments are set up, because you can make a $1 million gift into an endowment, and the organization is probably going to take 50,000 of that out, 5% of that out annually for operations. So, and most endowments are structured legally where you literally can't, the way the institution sets up the endowment, you can't take more than a certain percentage out. And often the gifts to an endowment, when a donor makes a gift to an endowment, they will restrict it for the endowment for the purposes of perpetuity. So one reason that you set up an endowment and give to it is so that you don't wreck an organization by giving it too much money, which was Rockefeller's concern. And then the other reason you give to an endowment is because you care about sustainability, organizational sustainability. Let me give you an example. I worked at a relatively small charity. They have a $10 million annual operating budget, and they had a $70 million endowment. Now, this was a charity established 150 years ago, so it's been around a while. One reason is it's been around a while is it has had an endowment and it's been growing. So you can do the math, Robert. A $70 million endowment, if you take 5% out, you're taking 3.5%, $3.5 million out in earnings from the endowment every year. So think of it this way: 35% of the operating budget of that charity is funded through earnings off the endowment. Yes. And you know this, if you're investing well, you should be growing by more than 5% a year. If your long-term return on investment is maybe 7% or 8%, the corpus, the amount of value in the endowment keeps growing, even while you keep taking more and more out every year. You grow by 8%, you take out 5%. That is a sustainable way to finance the operations in perpetuity, and that's the power of an endowment.
Yeah, I stumbled across endowments in more of I guess in organizations that I really had no idea they funded it. The average, I guess, religious church institution, very few have endowments.
True.
Maybe one could argue that the Catholic Church may have a significant amount, or other some there might be, but by and large, the vast majority of churches are very independent, and they sort of sink and swim by, almost sermon by sermon sometimes.
Well, yeah, too many charities live hand to mouth. That's the truth of it, yeah. And I don't think that's a healthy place either.
No, I agree. Is there a difference between philanthropy that goes towards humanitarian aid and or education versus political? In the United States, there's two very different, is it 50243, something like this? Whatever.
Yeah, so a 501c3
there we go.
In the US is a public benefit charity. And so therefore in the US, if you make a gift to that kind of charity, you're entitled to a tax deduction according to the tax code. A 501c4 is a politically oriented cause or a political action committee. So, for example, a trade association. If you're involved in the trucking industry here in the U.S., there's, I'm sure, many trade associations. You can make a gift to that trade association, maybe so that they can lobby lawmakers, and you can do that, and they'll receive your gift. But you will not be able to receive any tax benefit from that gift.
Yeah.
Because there's self-interest, right? You're making the gift for purposes of self-interest, not for public benefit.
Sure. So it's a big difference. I'm going to ask a very hopefully it's not controversial, because it's in the rearview mirror in my estimation, because I thought about this as I was doing research to I had to funnel what I would consider a large donation, but probably in many it wouldn't be a large donation, and that is, how do you find a good charity that you really appreciate? And one of the things that I do a little bit of research on is, what is the percentage of administration to the actual in the end being? Yes. And what came to my mind, see, in Canada, we had the We Foundation, or the We charity group here, that was both political, and they you can look on 2020 or whatever it is that had a long thing on that. There's controversy in the United States. I believe one of the biggest controversies there was the Clinton Foundation, where apparently, I'm just, maybe this is hearsay, but 95% went to administration and 5% went to something else. I don't know if that was true or not. Maybe it's more political or so. But when I give to a charity, I like to take a look at their balance sheet and income statement to find out what their mix is, and I find that there are some organizations that just have way too much administration.
Yes.
They're not really doing the work that they say. How, when you teach philanthropy, when you teach, I guess it would be maybe even charity on there, is there some sort of standard?
That's a good question. It's we don't teach a standard per se, but what we're aware of is what the market requires, right? So in business, you learn what the market will tolerate, what the market will require, and if you're going to compete successfully, you recognize most markets are mature, and the philanthropic market in Canada, and the US, and the UK, those are mature markets. So I could try to behave outside of the norms of the market, but I'm going to lose, to be frank about it, because the other forces in the market will prevail. That's just the reality that we live in. So what we know in the US, and in most Western developed nations, is that there seems to be, now this is there's no research on this, there's no science to it, but from a market tolerance standpoint, it seems to be that there's this line at around 75%. And let me explain this. Most donors, particularly savvy donors who can actually read a cash flow statement or a balance sheet or an audit, and not everybody can, Robert. Most people who can are looking to see that at least 75% of their gift goes to what's referred to as program, which would more directly benefit the end user, the beneficiary of the cause. 75%, which leaves 25% for two other categories, which would be, one would be administration and one would be fundraising. So that's a very simplified way to look at it. Now, you're an accountant, you know what cost allocation is, and you should know that most charities will allocate costs. Let me give you an example. I'm paid a salary. I'm a professional fundraiser. We can do a time study, look back 90 days of John's work, and we could look at and determine how much of my time is being spent in program, how much of my time is being spent in administration, and how much of it is being spent in fundraising. Now, you'd imagine the majority of my time would be spent in fundraising, of course. I visited with a couple last night over dinner, over some barbecue, actually, some really good meats. And so, maybe, I don't know, maybe 75% or 60% of my time would be allocated to fundraising, but some of it would be allocated to program and some to administration. So then, if I'm paid $10,000 a year, maybe 6,000 of that cost will be allocated to fundraising. You get the point. So there are the numbers that you see on a financial statement, but there's also allocation happening. And so when you look at a financial statement of a charitable organization and you see 1%, they raise $1 million a year, right? And 1% of that is allocated to fundraising. That tells me that they've got some allocation models that they've built that might not actually be completely honest or accurate.
Yeah.
The other caution I would
It
make.
takes a lot more to raise $1 million than $10,000.
That's right. That's right. The other thing I would say, so I'm gonna offer a counter argument or a counterpoint here. In business, let me ask you a question. You serve clients, am I right about that from an accounting perspective? Give me the range of profit margin in businesses that you see. What's the average margin that you're seeing? What would a range be?
Yeah, in the service industry, it tends to be between 10 and 20%. It can be and it can vary. It can be as high as 30%, 35%, but generally 15% is.
All right, so let's take 15%. Think about it this way: you're satisfied. Your clients are satisfied if in the end 15% delivers the objective of the business. The objective of the business is to make money if you're the business owner, right? 15%. What I'm telling you is in the nonprofit sector, we're held to 75%.
Yeah.
Right. So I guess what I would say, you probably have a few other questions here, but I could talk about this topic for the rest of the time we have. I guess I would say to philanthropists is understand the trade-offs between efficiency and effectiveness. And what I mean by that is you can have a very efficient organization with very low overhead on administration and fundraising, but they're constrained. They can't get to scale because of that. There are causes in this country, I won't name any because I don't want to draw attention to them unfairly. There are nationally recognized causes in this country who are spending 30 cents of every dollar you give them on fundraising, which some would say is scandalous. So they might be labeled by some as inefficient, but these are some of the largest, most respected causes in this country that are literally saving lives, millions of lives every year. So you could constrain them back to whatever, 5% spent on fundraising or 8%, but literally fewer people will be served because of that. So you get the trade-offs between efficiency.
Yeah, there's different business models for sure that how do we call it, cost of acquisition of a client. It would have a cost of acquisition of a donor would be.
Robert, this might be controversial, we spend more than $1 to acquire the first dollar from a donor.
Oh yeah, yeah.
You can imagine that, right? Cost of sales.
It's the repeat charity or repeat giving that's where
the value is. That's right.
For sure. Could you expound a little bit more on that?
Yeah. So this gets to the question of the question you started us on is how what about the percentage of a gift going to administration, fundraising, or program, to impact people, and it's an ongoing dialogue. And I guess I would say I do expect business owners, like if you spent your whole life as a school teacher or a firefighter, I wouldn't necessarily expect you, when you make a gift, to understand what it takes to operate an organization with excellence and in perpetuity, right? But if you run a business, I sort of do expect you to understand there's a cost of sales. And you and I were just talking about cost of sales a few minutes ago, right? You got to recruit world-class people, and you've got to keep them, and you've got to train them. You've got to study the marketplace to understand what's happening among the customer base. You've got to understand what customers are looking for, like what clients need, and then you got to design solutions around them. I mean, we do all of that in the nonprofit sector, just like you do a business, and that takes money. And if you say to me, John, I'm going to give you $100, but I want $99 of it or more to go to the beneficiaries you're feeding in Afghanistan, I can do that. But just understand, if everybody does that, if every donor does that, I go away. My cause just goes away.
Yeah, you wouldn't. You would have no way to support your agency. You wouldn't be able to sustain yourself in there. Is there any organization, any functions, maybe of government or so that I don't like to use the word police, but oversee the reporting and saying, well, this is a good charity, this is a bad charity?
Question. In the US, we file a tax return called the 990. So that's good because it forces us to, it reminds us we are going to go public to the government. Now, those are public records in the US, which means every donor, if they know how to find those 990s, can find it and see how we spend in these three categories. Most charities publish the 990 on their websites as they do their financial statements and their audit reports, because transparency is a good thing in our sector. And look, there's a lot of bad actors in our sector, just like there's a lot of bad actors in business. And many of us, myself included, we champion the pressure, the expectation among the public that we steward resources well, because we care about stewardship. And there's lots of causes that have given the sector a bad reputation, because there are lots of causes that literally will spend 95% of a gift on themselves. Yeah. And you've seen scandals with executive compensation that's off the charts, or lavish spending on trips for staff, and lots of other extraneous expenses that don't actually have positive impact on the mission. In the US, there's Charity Navigator, which is an aggregator of data that makes the 990 data easily available to everybody. And they issue sort of, a stamp of approval with different levels, and there's several charities several organizations, rating organizations that do that. So yeah, these are all the forces in our marketplace that we know to expect.
Sure. When it comes to evaluating good charity versus bad charity, it's oftentimes very, very subjective to the donor. It's some emotional tag somewhere, and it can right. be taken in perpetuity sometimes, that the person can walk on water, so to speak, in that regard. And the scrutiny sometimes isn't there that should be. But there's also a certain amount of general, shouldn't say animosity is too hard, but people don't trust. Skepticism for charities, and they say, oh yeah, all they ever want is money. All they ever want is money. From what I have seen and understand in my research, if you compare the effectiveness of a charity versus the effectiveness of government, they are so far apart. They're in different universes. I remember one interview. Bill Gates was having coffee with Warren Buffett, and they were actually recording this or whatever. And Bill Gates was telling Warren about a certain educational plan that they had. They put $400 million towards this particular project, whatever it was. And the project actually, it had to partner with the government. And because of the government involvement, it became so inefficient that it was basically ineffective at all. And Bill Gates was telling this to Warren Buffett, and Warren Buffett was way more interested in what was on the on the menu than he was on the $400 million. But I remember listening to this and going, man, that's it's unbelievably inefficient to have to work through a government, and yet that was what Bill had to do. A charity can sometimes do 100 times faster and better than any government organization. That's my general understanding. An NGO, anything NGO has much more effectiveness, generally speaking, than just that is my perspective. Why somebody would probably lean more towards giving to a charity than giving in taxes or not. It's not really, you're not really giving in taxes, you're actually being taken away from. But that perspective, the inefficiencies of government. I really enjoy a lot of the accountability in charitable and philanthropic organizations, where they have to reveal how efficient they are with their funds. That in and of itself, just that one feature makes them accountable. Whereas in government, there is almost no incentive at all to be efficient.
Well, there's no competition. Government generally has no competition. Whereas in the charitable sector, there's an enormous amount of competition,
Sure.
which is a good thing, of course. I hear you using the word efficiency a lot. That doesn't surprise me. I want to encourage you to also be looking at effectiveness or impact, because that's, I think, why you're making gifts. People actually, when we ask people, when we ask donors, why do you give? If tax incentives come up at all, Robert, it's near the bottom of the list.
Yeah.
And this cuts across socioeconomic differences. People give because they want to save and change lives.
Yeah.
That's what
I would agree. Personally, that's what I want. But I'm from a podcast perspective, I want to make sure that people understand. There's so many people who just say, "I'll do anything, just I don't want to pay any taxes." That's sort of the bottom line. And then I said, my answer to that is, instead of buying a new truck or putting chrome on their truck, because I deal with the trucking industry, I just say, just give to charity, because it's 100% deductible from your corporation, and and you actually gain some sort of value in it. You won't be able to see your reflection in your chrome, but you'll definitely be able to feel that you've accomplished something much more.
That's exactly right.
Yeah, in there. But I'd really like. Is there some sort of a measurement of effectiveness out there?
Well,
also subjective.
It takes work on the part of the donor to understand that. So, let's assume that your passion is education, or let's assume that you care about education. You're thinking about making a gift, a material amount of money, maybe out of assets, right? So we're not even talking about a gift out of income, but a gift out of assets, which would be a more material gift.
Mm-hmm.
If you're thinking about doing something like that, then my advice would be that you do some research, right? So you start answering some simple questions. Is there a particular demographic or age that you want to focus on? Do you want to focus on primary education or secondary education or tertiary education? Do you have any particular sectors you want to influence? Do you want to influence life sciences or arts? Do you want to advance the education sector, right, through teaching people how to be good teachers? Are there any demographics that you want to focus on in your education in terms of income levels or race or gender or whatever, right? So that helps you narrow who you're going to support. Then you got to find charities who serve in those spheres that you've just decided are important to you, and you got to do your research and you got to compare. Okay, so we've got charity A, B, and C. How many people are they impacting each year? That's one question. How many children are they serving each year? Do they have really big numbers because the amount of intervention is very limited? they have small numbers served, but the amount of intervention is substantial, right? Because
What do
you
you mean
can,
by intervention?
yeah, well, let's talk about youth and youth development or children. Um, I could claim that, I'm a youth charity and your gift means that you'll reach 1 million children. But if the extent of my intervention is I mail something to those children or to their households, um, I get a lot of, I'm exaggerating the point, but I'm
Yeah,
getting a lot of reach with virtually no impact, right? Because that
sure.
stuff's gonna be thrown out. But if I'm running an after-school program and I have a facility that's smartly located next to a low-income community, and kids are getting off the school bus, and instead of going home to an empty apartment where there's trouble waiting, this kid can come to my clubhouse and I can help this child learn how to read or learn how to do math so they can be an accountant someday. Well, my numbers might be lower, much lower, but the extent of my substantive impact on the child is much deeper. So it's hard. It's hard to compare apples to apples. It's not like buying an appliance, right?
Sure,
Where,
yeah.
where you could where you could just quickly do some online research and make a decision.
Or just read a few reviews. That's
This is the interesting thing about the human condition, Robert, because actually, let's talk about buying an appliance or buying a car. I'm blown away by my friends and family who buy cars. And honestly, they make really dumb choices. And what I mean by that is when I probe, they buy the car because the brand means something to them. Like maybe because their father owned the brand, or they like the bells and whistles on the vehicle. Meanwhile, I'm thinking to myself, look, I've done the research, and that's one of the most unreliable brands that
yeah,
you just bought. Or the resale value on that thing, like you're going to lose all the value. You're not, if you ever resell that thing, you're not going to see any value back. Meanwhile, there are a few brands. They might not be the sexiest cars on the road, but the cost of ownership is going to be very low, and the resale, the ability to retain value and gain that on the resale is very high. Like this data is so available. But
yeah.
here's the thing, Robert, whether you're making a car purchase or a charitable purchase, this is the thing about the human condition. Those decisions overwhelmingly are emotional decisions. They are not rational decisions or
There's a
database.
lot of sentiment in there, association versus, and it's much more emotional.
Right. That's right. And some folks in your profession will gravitate towards the data and the analytics, which is terrific.
Actually, no. I'll tell you, the accounting industry. At least I've been in it for 20 years. People have more sentiment. They to an accountant than they do even to their doctor. They can stand and naked before their doctor and feel okay. But if they stand before their accountant and they have to talk about what they spend and stuff like this, it's a much more intimate thing. And so moving from one accountant to the next, it's sort of like, I was with that person and they know everything about me. There's a lot of sentiment of value, even if sometimes the accountant is a terrible accountant. But it's that intimacy that they can't break away from, or it's interesting. Interesting situation. But charity is very much like that. We have always give to this organization, and they would never think of looking at their balance sheet and their income statement or anything, because grandpa always did this and grandma always did that, and we just keep right on doing whatever someone else was doing. The research is so very important, but it's very, very difficult. And that's why when I heard that you taught a class at a university, I'm thinking, okay, nobody. I mean, I've never heard of it before, and I'm just fabulously thrilled that somebody's thinking some of these major questions through. What are they going to do with their money? Where are they going to do? How are they going to express their gratitude to society if they have abundance? And are they going to express it? Most likely, they're going to express to something they have high sentiment to, high emotional. They really want to help somebody. there. That's and it's very. You're right. It's an extremely emotional thing to do it. But I'm fascinated. It's a difficult subject because the vast majority, I would say, well over 90%, when it comes to charity, they don't want to be taught, and because it's too difficult. It asks some questions. It's very interesting. When I was reading Rockefeller's book, which is a great book, actually, it becomes highly recommended by Charlie Munger, the book Titan. In there, Rockefeller wrestled for sometimes 3-4 days by a letter of somebody asking for $3.50 or $5, which is a very small amount, less than $10. And he would wrestle 3, 4, 5 days whether to send this person that money or not. And yet, and then he would write out a check for $50,000 for much less. How do I say, contemplation on it, and he was troubled by that because he felt an extreme association or responsibility with the money that he had, that it was supposed to go to something that he felt really is the right thing to do. And that's a difficult river to traverse. If you are looking for, okay, do you judge this person yes, that person no? Do you give money to your family? Do you give money to this organization? That it's a tough one. It's a lot of work. Philanthropy is a lot of work.
It is, and so people who take it seriously tend to be sure they have the right resources to do it well. This is why they establish foundations. This is why they hire advisors, because it is work. If you're going to do it well, if you're going to give with excellence. It needs to be very thoughtful, for sure. Of course, Gates and Buffett and others know how to earn money well, and they know how to give away money well. I would say this, sort of in wrapping up here, Robert.
Yes, sorry.
I would say this about my profession, about professional fundraising, and there's hundreds of thousands of professional fundraisers in North America. And many of your listeners and your clients probably don't know that, but there are. People have some perceptions of us, that we strong arm people. We try to convince people to give. Some even say we manipulate, and we take those accusations pretty seriously. And of course, there are a few of us who do that. Right? So at the Lilly School, we talk and teach a lot about ethics in fundraising. We take ethics in our profession very seriously. And I guess the final point I want to leave you with is this. Professional fundraisers we don't spend our days trying to convince people to give. We spend our days trying to find people who are generous and want to give.
Mm-hmm.
And then we help them do that well. That's when we do our jobs well, that's how we spend our days. Honestly, if you're not a charitable person, if you don't have a giving heart, why would I spend my time with you?
Exactly.
It doesn't make any sense, because there's plenty of other people all around you who love to give and who find joy in giving. And so for those of us who do this work and do it well and do it successfully, those are the people we want to spend time with, and those people take their giving very seriously.
Exactly. Well, that's a great conclusion. I really appreciate that. That's fine. That's great. Well, thank you very much for your time. I really appreciate it. It was very eye-opening for me. Just the concepts and the vast scale of the industry that you're involved in, and I really appreciate it.
Well, thanks for asking me to contribute, and I'm excited that in some way a few people might hear something and learn something. So that's a good thing.
Thank you very much.
All right, Robert. Take care.
Take care.
Bye-bye.
Thanks for stopping by Making Your Miles Count. For further Making Your Miles Count productions, call us at 877-987-9787 or download us at makingyourmilescount.com.